So so this is exactly how we use SMT divergences. We saw we missed our move on NQ, but we have an SMT divergence. So we have a leading index and a lagging index. All right. So the leading index was NQ. NQ was pushing higher. We missed our move, but we already knew that if NQ was going to push higher off the SMT divergence, then ES is most likely going to do the same. It's the lagging index. So I took my trade off of ES because I already knew what was going to happen. I knew NQ was pushing higher, so I know ES is about to push higher, even though I missed my move on NQ. So we entered in off of the 15-minute order block after we saw NQ pushing higher, and then yeah, we just took it higher, caught the move higher. But that's how you use SMTs when it comes to the leading and lagging index. But yeah, so today, decent day. I mean, I had this blue line marked out right here for our point of liquidity to target. As you see, if you're still holding the trade, you definitely got filled. Honestly, beautiful day. If I had to say pros and cons for our journal, let's go through it real quick. Pros: great discretion, understood high time frame bias, and we had a story. You see how like I'm making a story of everything that's happening. We had all of our high time frame confluences. I'm also implementing my discretion with my higher time frame confluences with what's happening on the 5-minute, what's happening on the 15-minute, and I'm making them like kind of intertwined. And then if I'm my model lining it up all together, then boom, we have like a solid day behind us. All right, so great discretion, understood high time frame bias, identified, model, and executed appropriately. Identified that 15-minute order block too, because if we did not identify that 15-minute order block, we would have been sitting here waiting for that 5-minute order block to get mitigated, and we did not have any mitigation to that 5-minute order block. So making sure that we had the 15-minute order block, that definitely helped us, because it helped us identify our entry. So identification of 15-minute order block. Cons. There's always cons. Every loss, every break even, it's it's on us. We have to understand the cons of what happened today. So we were a literal tick off of hitting take profit. Honestly, like sorry I got so mad because I don't think you guys really seen me in that element before. But yeah, they get mad about that, but there was a reason behind it. There had to be. Has to be. Always. Stuff doesn't just happen for any reason. So of course there was a little earlier entry today. Today there was definitely a good volatility factor. We were pushing extremely fast on NQ. So we definitely wanted to we should have accounted for possible volatile rejection off of the lower time frame gaps. So as well as this 5-minute gap here too. This 5-minute, remember I marked out this 5-minute gap here? We definitely wanted to see some sort of rejection off of that, as well as this hourly gap. So we could have just took this to our hourly gap and really just called it a day, honestly. Once we see that we were mitigating into this hourly gap on NQ, we should have took off a contract and secured more profits, and just like held the other contract as a runner. So that's where we went wrong today. This is why you always need to identify your higher time frame confluences that are around your take profit, because you can see a rejection off of it and that can stop you out or put you at break even. All right. So although we did take a contract and profit, we did take another contract and break even. And could have been avoided, right? With that second contract, we could have just held it until this hourly gap. So here, let's journal that out. Let's just type that out real quick. See how there's reasoning behind every move made in the market, bro. So we recognize that cons didn't, and I did have like a slight feeling when I was in the trade, like that was kind of being ignored. That we did have a higher time frame gap, because I did see like this green block right here. I'm like, what did I mark up? But I was so like locked into the trade, I didn't even think to look more into it, which is something we definitely have to do. So didn't take notice. I'm not gonna say we didn't take notice, because we knew it was there. So didn't acknowledge the 1 hour gap that we could potentially be seeing rejection off of, which caused a rejection, or which caused a pullback, essentially taking us out of the trade. Essentially hit us out at break even. And this gap was on NQ. So even though it's not on your index that you're trading, you need to look at ES and NQ, because I say this all the time. You cannot trade NQ and then not trade ES. Vice versa, you cannot trade ES and then not trade NQ. They're correlated indexes. You have to look at both of them to understand the whole picture of what's happening between both of them. They're like brothers, twin brothers. They have minor differences, but it matters. Break even. All right, so which caused a pullback, essentially taking us out at break even. All right, so what can we do tomorrow to improve? So tomorrow, looking at higher time frame. Looking at high time frame. Now, if it was like a 1 minute, if it was like a 1 minute fair value gap that we just had to like push through, I'd probably just hold. But since it was like that hourly that we were tapping on NQ, like that was pretty substantial. NQ, even though we took the play on ES. Taking us out. Alright, so tomorrow, looking at high time frame confluences that lie around our take profit we want to see, because clearly we could have had a play on NQ today and it was just moving crazy, like very quickly. And honestly, I think that was just like a play we missed on NQ. Not even the fact that it was moving really quickly, we still could have got an entry off of that. But, and also tomorrow getting into market a little quicker, because today's analysis, I can definitely tell it was quick. Not to say it was rushed, but it was quick. Hours. 9:10 a.m. All right, let's just say backtest this play. All right, that's it. All right, so that's how you get 5 to 10 times better. Yeah, that's how you get 5 to 10 times better trading after your trading day. Just taking 5 to 10 minutes, literally just to write down your pros, cons, what can you do better tomorrow, and your to-do list to get better. All right, so that's our trading day. I'm gonna also pop like a couple screenshots of this play into my journal just for like back testing purposes. I'm just gonna do the ones that I mainly used. So 4 hours since we had the SMT. Pop that in there. I pop the 1 hour in here. Five-minute. Dang, this would have been perfect. Come on, yo. It's all good. That's how you know, like, you have like something that works time and time again. You never stress because you know when it's gonna play out again. And that's all from the glory of God, bro. This whole model, eye for the market, literally all because of God, bro. I promise you. I know nothing. This is all from the man above. And also the 1 minute screenshot. All right, that's it. That's it. Here's the done journal for today, February 5th, 26th. All right. All right, I'm gonna hop off the charts now. Probably take a shower, get some breakfast, go throughout my day. W day, guys. I'll see y'all tomorrow. God bless you guys. Peace. Lord, thank you. Whoa.